So that came from BVA for you.
The marketing plan review, are we doing that?
Just if you have any questions on it,
Okay.
because Chase and TM have already done it, but
Okay.
because the marketing plan and the sales plan have an impact on the budget,
Okay.
that if you have questions, they're here to reference that.
Okay. Call the meeting to order. Roll call.
Ms. Lookout,
Here.
Mr. Olson,
Here.
Mr. Walker, Mr. Erkins, Mr. Restigar.
All right. And with this being a committee meeting, we do not have a quorum. So no action will be taken at the meeting. It's discussion only. Are there any changes or additions to the agenda?
No.
All right, seeing none, let's move forward. No remarks. Pat and Marie, I'll let you guys kind of take it.
Actually, since this is the budget side, I'm gonna turn it right over to Anne Marie. I would like to recognize Anne Marie's efforts, though, having been sick for the last week and finally getting the appropriate drugs to help her feel better. She pulled it off, so a little bit of a scramble, but thank you on behalf of her efforts and Cody's to make sure that it was all wrapped up. So
I'll just echo that, and I'll kind of kick it off here with just thinking that the finance team, the entire team on the entire Boise Center side on their efforts this year. Questica was quite the improvement for us from a budget software side. Gives us a lot more insight into what we put in there. Also allows us all to work on the budget simultaneously. So I think it allowed for a much more conducive budget season this year. So appreciate all the efforts Joanne put into that. We're looking at a kind of a flattening this year. I'll let Anne Marie speak to some of the numbers, but as we spoke to at the last finance committee meeting, it's more of a 5% increase, similar to what we've seen in 2023, looking at 2024 with some additional positions, which I'll speak to when we get into that we've added. One of them an HR business partner position, an IT director, as I've talked to the board about as well, the technical services director that'll oversee IT and AV together. So if you have any questions, pretty proud of the team in this year's budget process, so thank you.
Okay, so this is the draft, the summary is the front, and then Jody had asked for some additional detail. So the second set of documents is the Boise Center budget line by line. So if you want to see a summary of the Boise Center, then just, looking like column M of the first page. And then the detail to support all the numbers is in the second document. Excuse me. As Cody said, from the center side, we're projecting about a 6% increase. So our revenues are projected in about 10.7 million. On the district side, we think we're going to end up the year tax revenue wise somewhere above 10 million, and we're projecting 11.6 for tax revenue. And that increase is because there's several rooms coming on board, and our assumption is that people choose to stay downtown. And so even though there's more rooms coming on board, it's going to bring people from outside the district into the district, and those rooms will stay full.
What is our, Madam Chair, what is our revenue capacity?
Do you mean for the district?
For the district? No, for the center.
I think we're pretty close, Jody. The only way at this point that I think, there's a couple of ways that will increase the revenue. It's not going to be significant, is utilization. So if we have an event over in Boise Center East, we have an event over here, and they're not using 200. Can we get a small meeting in here? that we'll use, so we don't have to add more employees to service them, and can we serve them the same food maybe that's already being used for the other event? And then it becomes, I call it threshold pricing, right? You've already met all your fixed costs, and so then that's your gravy.
Yeah.
But there is a perception when people rent the facility that they're renting the whole facility. And so there is some objection to having other events going on at the same time there are events going on. There's also just certain days of the year that you're not gonna have people in here. You know, a Christmas holiday, from Christmas to New Year's. And so we're just gonna have to become better at utilizing the space we have.
Yeah, I was just glancing at page 25 of the marketing plan, which is our sales goals. And I think that's a priority list. And I assume that the number that you just gave us, 10 million,
10.6.
is let me ask it this way. Does it fit this? Are we
Yes.
consistent with this?
We know, we have, some data that tells us on average, a convention generates this much revenue. On average, a local event generates this much revenue. And so we can back into the number of events that we need to get to our 10.6. We
How
also
many,
have, in Ungerbach, we moved financials over to Ungerbach about 3 years ago. And the reason we did that is because Ungerbach has the ability to forecast revenues. And so when we look at Ungerbach, our revenues right now are a little bit under 10 million for next year. In the past, to give you an idea of how much we've improved in our forecasting, it used to be we would take how much was in the forecast and add 100%. Because we booked about 50% of the events in the year for the year. We have moved, last year, I think we booked about 20 to 30% of the events in the year for the year. This year, this 10.6 is only, we have about 10 million in the forecast. So that means we only are counting on booking 6% of the year for the year. If we do 20%, we'll be above the 10.6. But we're getting, but the forecast is becoming more reliable in that 1 year time frame. And so that's.
How
But
many
Jody-
in this budget, how many of our conventions are A's?
For next year. I would have to verify, it's probably a handful. 5 or less. Mostly they're the mid-size, that 100 to under 300 on peak.
I mean, what I was gonna ask is, would it make sense to just fill it with A's?
We can't.
The right ones, yes, we would like more of the right ones. And meaning, Botanical Society of America, those high revenue generating food and beverage, audiovisual, high room night generating. A lot of times those do require some, additional concessions to help offset facility rental, but it still works out in Boise Center's favor. We have a few of those groups next year, Daughters of the Nile in June. October is a really great month for us with some national conventions coming through. The trick for us and for the two teams is to manage pattern. If we can get those big national conventions kind of on the front end of the week, like say a Sunday to Wednesday, Sunday to Thursday, it leaves a Thursday, Friday for some nice banquets. We can sprinkle in meetings, when, on the front end of a move-in, while a convention's moving in, we have the ability to host some meetings, some smaller events during that. So it's really just being intentional on when and where we're placing these big conventions.
Yeah, I'd speak to just the availability of the hotels and the ability to get those convention A's in, or the A-tier conventions in. And then as well as displacing possible local revenue generating events from the center side that come year after year to push them off for a 1 year convention. we're really strategic in that. So when you ask the question of what's our revenue that we can maximize, it depends on our pricing. I mean, we can continue to raise pricing, but the local events have nowhere else to go. So I'm either gonna price them out or pinch them to a point where they can't make money or generate funds for their organizations. Because they don't have anywhere else to go. And so we're currently kind of looking at what others are priced at in our market, as well as trying not to compete. Allowing groups, and this was a discussion in our meeting this morning with the event managers, looking at groups that are small enough to potentially go somewhere in Boise outside of Boise Center, even smaller conventions, that we would still win from the convention side, and then booking groups that are of a certain size here to generate more revenue on the center side, still allowing the district to win on the convention hotel side, at maybe putting a conference at a hotel instead of at Boise Center, something smaller.
Well, this also leads, Jody, to the conversation we've had in the past, and if Jim were sitting here, Jim is pushing for more conventions. Jim wants more room nights in the market. Jim wants more conventions, and again, he's made that pretty clear, in our past meetings. The problem is that, I mean, if you want to push, if the board wants to push revenue, and this is where, Ally is going to get pinched, is the fact that most of the time, certainly not all their conventions that bring tremendous amounts of revenue in. But we're displacing a lot of the local events, and that's where, right now, the team has been trying to do 50% conventions, as far as total utilization versus local events. And quite frankly, I think that there are times when we're leaving money on the table because we're booking conventions instead of local events. Now, with that being said, I don't want any offense taken by my sales team or our sales team, because they're doing a great job. They're doing exactly that which we've asked. However, there is arm wrestling that goes on every week at our event manager meetings, at our sales meetings. So we want to maintain a good relationship with the hotels by booking conventions where they also want the rooms, and that's been the challenge, and you've heard that before. So if we displaced more conventions and took local groups, we probably would drive a higher revenue. But in order to keep the balance in the marketplace, this is about where we are. So answering your question to the dollar.
I got it, thank you.
And I guess how much of the budget or the variance do you anticipate with the add-ons, F&B, AV, all the ancillary services?
20% of the current budget is probably, and Henry probably speak to that better than I could, is forecasted current versus what's actually in the books right now.
Because that could be another way. It's basically upselling, right? You upsell the client and you get more AV, you get more F&B, and that's another way to generate revenue rather than just in addition to maximizing utilization, right?
Absolutely.
We also have to have the staffing levels to be able to produce those events. I mean, we did the gala last week, almost 1,000.
900.
So, we're finally back up there, but we haven't been pushing it. We haven't accepted 1,000 for some time, although we're back to that level now. But we're still not quite up to, I think we're at 225, 230 on the employee side. So we're not quite to the pre-COVID staffing levels still.
And the AV is also an opportunity, right? I know that they've been really.
Well, again, it is, but it's the staffing side of AV that we have to make sure we maintain. So you're absolutely right. Those are opportunities, but we have to be able to provide that.
And it continues to be a very competitive labor market as well. So the technicians are in high demand. You said, that. In particular, so that we're having to be competitive there. So I think as that market settles down, there is more opportunity to drive more revenue through the technical services, which is the intent of adding a director of technical services, to really get on the sales side of it a little sooner and see where we can be presenting Boise Center's in-house services as early on as we possibly can.
And it looks like, I don't know if I'm reading this right, it looks like maybe decrease in AV.
Sorry, say that again?
Decrease in AV, am I reading that right?
What line are you
To the
looking at?
budget. Oh, see, yeah, no, that's going up.
It's an increase of 76,
Oh,
75.
23 to 22. Okay.
And then you also have the other income AV, which is on line 20.
Okay.
And then you have service charge revenue AV, which shows a decrease. And that's just based on a percentage of your. So 2023 is based on actual, and then your
Got it, okay.
projections based on a percentage.
To Jody's point, I think we are hitting a saturation point. I think this is the moment where we really start looking at either more space or is it economic impact or revenue that we want that 50-50 until the board tells us to direct in another direction. We're gonna continue to try to kind of balance that as best as we can.
You've already done the service charge increase and increased menus and
There may be an opportunity, again, the market is doing things that I've never seen before. When I go to IAVM and ask my counterparts about what our service charge percentage is, those are going up to 24, or some even higher than that. But we've stayed pretty much right at or right in where the majority of the hands come up at 22% is where
you're
most of the hands
22.
go up at right now from the service charge side. The ability to charge service charge on more items is something I'm continuing to look at because there are some venues that put service charge on all services across the board.
Cliff, as always, this nice looking product. What do you do with it?
Give it to you. It is our roadmap. It is our guide for the year that outlines our goals, our objectives, and our projects, just to keep us on track. We outline a budget, and each of the 3 areas, Mary Michael does communications, and Ellie does the sales portion, and I do the marketing section. But it's just to show what projects we're working on with the agencies, where we're going to be traveling for trade shows, what we're doing for the website and for social media, all those different elements that help support the budget that we create. So it's a story. It's our annual roadmap.
Would you send this to a client?
No, not typically. There's sometimes other venues will ask to, review another property's sales and marketing.
Well,
plan
sure,
to
there's
share
all
with
that
them.
hotel information.
You know, it's certainly internally with our team members that are executing the plan that, holds us all accountable. And like Cliff said, it supports the budget that we've presented.
And we share it with the Visit Boise crew so that they are on track with what the goals are, so that we're communicating back and forth as to the direction we're going.
I've never had a public records request for one. We have it we put it on our website. So, and I can't tell you how many hits there are on that. Mary Michael might be able to, but I've never had somebody ask me for one.
Thank you.
On the second page, or I guess it's page 3 of the detail clerical tech services, is that just a new position?
We split them up. We wanted to move the technical service into its own general ledger so we could track the technical services expenses and costs related to the revenue generated, where before it was all in 80. And so this, by adding a few more GL counts, it allows us to break that out.
Yeah, that position was the former IT manager position, which was actually in 06, which was in our operational account. So now we've got that as a full technical services department, so they can manage their own GLs, their own accounts.
This one is the. Never mind.
Isn't that
And ignore the reds, those are just some new accounts we've added that I need to program. I need to go in and make sure I get my formulas in. We are starting to track. In the past, we've used internal reports for overtime, so if somebody wanted to see how much overtime, they would have to go to the HR side. And we're putting in general ledger accounts to allow us to see dollar-wise how much our overtime is, and so we can start gathering it and comparing it from quarter to quarter, year to year, month to month.
Payroll provides a report to me and obviously not Cody prior to payroll distribution. And it outlines specifically what you just said. What departments have an overtime, how much is it? The kitchen is one that I like to really pay a lot of attention to, because there are times of the year when those guys are getting literally 30, 35 hours per pay period in overtime. Just making sure they're staying vertical. I think there's good overtime and bad overtime. And so in order to pay attention to what departments are getting it and why, it's a great report. Knowing what's going on in the building certainly supports or not If there's a department, particularly culinary, that's getting a ton of overtime. AV, a lot of times when we're having a lot of big events, back to your point. You know, those guys, depending on how many events are happening in a pay period, they'll get a bunch of overtime too, but it's a cool report because we pay attention to it. You can flag it if all of a sudden there's a name on there and it's like, why, right? So, anyway, to her point, it gives us a chance to see, and the other thing is, if you see consistency in overtime, do we need to add a body or two?
And
Again, culinary still.
this will provide a little more visibility to the director level than currently me or Pat having to go talk to them and say, hey, we've got some overtime here, or what are we doing? They'll have it on their GL screen. So I think it's a great idea that Emery's added this.
Anne Marie, where's the cash?
If you look on here in the column T, U, V, and W on the summary sheet, we start with the cash in September. We estimate how much district cash will come in the next 2 months, so that's tax revenue minus transfers. Then we have Boise Center remaining transfers for 2023. That is how much is budgeted, but not, hasn't been used at this point. And then you will end up with a cash ending balance at the end of the year. And I realized I need to fix that because I've double counted something in there.
That's the 22 million.
Yes, and then we've got the stabilization fund.
Yeah, are we gonna do anything on that?
That's what I was wondering. The stabilization fund? Were you gonna
Yes.
bring that up today or are you gonna?
I'm not going to today because of me being sick. I didn't get a chance to look at it. GFOA has also come out with some additional recommendations on how to analyze the stabilization fund, so I need to pull that information. They've got some worksheets and it's just another method
Okay.
to the way we do it, and I wanna just evaluate it. So my thought would be, it's not critical to the budget approval. It is critical to the end of the year financial statements, so I thought we could discuss it next month
Okay.
and get it approved then at the November meeting.
Okay, and I'm gonna add something to your list to have for that discussion is how much of that stabilization fund we used during COVID. And what the usage was and how we paid that back and all that
We
stuff.
actually didn't use it. We made a recommendation to use it. And then we went back and we didn't need it. We had enough cash on
Yeah.
that wasn't in the fund to use it, so we never, from a investment or a bond perspective, I thought it looked better if we actually took the money out of our general operating fund, then dipped into our stabilization fund. So we actually did not dip into the stabilization fund. We funded it directly from operating funds.
Where do you think we're gonna, is it gonna get bigger or smaller?
Cash, it'll get bigger.
No,
No,
stabilization.
Bigger. Just because the way we do it is we look at revenue or expenses, right? And we try to budget for certain months of expenses. And as our income has grown, our expenses have grown. And so, and our capital needs have increased as well. Right now we have, it's like, I'm trying to remember if it's 2 million in there for capital. And so our capital needs are increasing, especially as Boise Center East is aging. And so we may need to add some additional money for the capitalization.
2 million exceeds your annual depreciation.
I think our annual depreciation's around 2 million.
Thank you.
And with the stabilization, I know we're gonna talk about, I wanna talk about some of the minutiae here. The stabilization fund, is it really just an accounting of how you do it? You still invest that money, right? So from the book's perspective, like how does earmarking that stabilization fund affect the rest of the money?
It doesn't, it has not much effect. I mean, the way we manage the portfolio, and we'll have Rhett here tomorrow to talk about the investment portfolio. But right now, we just say we want a staggered or a laddered maturity from 1 to 3 years. And so if you take the portfolio and divide it in a third's gonna mature in a year, a third's gonna mature at the end of year 2, and a third will mature at the end of year 3, and we manage it as just one portfolio. Our philosophy is that by keeping it, if we had to liquidate something early, the losses wouldn't be sufficient to offset the income that we've made by being in investments instead of just a liquid account.
What I'm hearing, Madam Chair, is this is a guideline we come up with. It can be more or it can be less,
Yeah.
right? And we're not bound to, I mean, the staff will use it to budget. And our Clearwater people will use it to time their investment. But if we woke up one month and wanted it to be something else, we could do it.
You can change the policy, exactly.
Yeah, okay. So,
It's just,
That
it's
takes
just
a
a
board
paper
approval.
reflection, that's all.
And the reason, that's why we did the stabilization fund was just, so the whole board was on consensus, was in consensus of what that amount would be. And that you wouldn't end up with maybe 1 or 2 other board members that could just come in and change how much that fund was. So it was just to get a consensus of, this is how much money we're setting aside and saying, this is gonna be a stabilization fund that we will never dip down below.
so we'll always have that amount in the bank account,
Or in the
Basically.
investment portfolio,
Right.
yes.
simplifying. So if somebody wanted to write a check, say we do some sort of a project, we couldn't write a check for any more than, we'd still have to leave the stabilization fund in the bank account, right? Because from what
Unless
I'm,
we didn't want to.
unless we didn't want to.
Yeah,
I mean,
you
we can
you
change
can
that,
vote
right, okay,
as the board to take it below to whatever level you want,
right.
for sure.
But it's more just a benchmark and more, in my mind, I'm thinking that's more the scenario than it would be in a disaster, because when we're talking about COVID, I mean, what else could happen? I mean, knock on wood, right? But to the point of the fact that we didn't even have to dip into the stabilization fund and pull money from that in that environment,
In that crisis type environment.
in a crisis type environment, it's unlikely that we would need to do that, hopefully in the future. So it really would be, I think in my mind, more of if we want to do a project and spend all our money, right?
The other thing is it sends a message to the bondholders that says it's not our intent to run the district down to zero cash.
Okay.
Because that's what we have. It consists of operating needs, debt service, and capital. So those are the 3 parts that we keep in the stabilization fund.
Keep in mind, it sends the message to those who would want access to district money as to
How much is,
what the intent of the district currently is to protect its own assets.
all right, thank you.
So, but to answer the question that Hai would ask, how much money is going to go into the pot during the year? It looks like about 3.2 million. So we worked really hard on the budget to try to maintain the expenditures so that expenditures didn't increase. They've increased some because revenues have increased, and so as a cost of goods sold, it's going to increase. But we really made a commitment among all of us that we were gonna try to hold the bottom line and not ask for any more money than last year. And the one exception is the capital, right? So the capital's going up $1 million. That would be an additional.
Well, High lives on even though he's passed, because I think what he would always focus on was the board's belief commitment is that we increase in years when we're operating at capacity. We should certainly increase cash.
Mhm. Yep.
In case there's a rainy time.
So if you look here, the available for projects, which would be line 64, so it shows about 16 million. Of course, that's with the stabilization fund of 6 million. I've then taken the debt balance out, just showing that if you chose to use your cash to repay off the debt, then you'd be a negative 1.5. But it's current, so you get an idea of just how the cash sits with debt there. Any other questions?
Well, since I may not be able to be on the portion of the meeting tomorrow to talk about the investment, I have a question about the investment. Remind me what we're invested in and what our returns are, or what we can invest in. I know that,
Basically, we invest in treasuries and agencies. We don't invest in corporate bonds, we don't invest in CMOs or any type of real estate secured investments. In a government entity, the number one priority for an investment portfolio is preservation of principal. Earnings is like the second or third goal.
and it's 1 to 3 years. So what are T-bills? Because aren't T-bills pretty high right now?
Depends on the maturity. I didn't look at it for today. Rhett was going to talk about that tomorrow, but I can get you a statement for the end of the month.
Because I know, from what I remember from our previous meetings, the return on investment is under 2%, right?
It depends on how you look at it.
Okay,
And that's what I asked Rhett tomorrow to talk about is you can have your gross return, then you have your return after fees, right? Then you have your return. We have what we call amortization or premium, discount or premium. So if we get let's say we're buying a bond and it's, just as an example, it's at 1%, but the market's at 2%. Well, we're gonna pay less for the bond, right? So that we can still get a 2% return, so you have a discount. Let's say then the interest rate's the other way, the bond's carrying 2 and the market's at 1, you're getting more income than the current market, so then you have a premium that you've paid, and you amortize that over the life of the loan, or the bond. And so then you have your net, and then you have your unrealized gains and losses. So you've got different components that affect which yield you look at, and Rhett's gonna go over that tomorrow
okay.
as to which one we compare to, and so we compare at different times. There's different information in each one.
You know what might be helpful is to make sure that the board tomorrow has a copy of statute that limits us on our investments.
Oh, yes,
So just print a copy of that which is in statute itself.
okay,
And then maybe Rhett can do a comparative that says, here's what you're legally capable of investing in, and here's what we invest in on your behalf. So that
Yeah,
not only will everybody have, but if she's not able to be part of it, then at least
yeah.
it's a pretty straightforward picture of what the law says we can do. And then where they invest on our behalf within that parameter.
and I can,
Okay, because I mean, I like to simplify things. In my brain, if a T-bill is at 4%, 5%, it's like, well, why aren't we getting at least 4%, 5% on?
well, it has to, and part of it has to do with the age of your portfolio, right? So if we have if we have stuff that's 3 years out, it's a lower yield. So we're carrying those lower yield assets for 1 or 2 years. So even though you can get 4%, but a third of yours is at 1%.
Yeah, okay. I had to ask.
No,
One of
that's
those
a great
things I look
question.
at and I'm like, huh. Didn't make sense in my brain, so.
But there's only certain things by statute that we are allowed to invest in.
Right.
I guess I'd ask the board, I mean, just for the perspective of the finance committee, is the direction we're headed at that 50-50 balancing economic impact and revenue still with I mean, we're always looking at 2 to 3 years out from the convention side, so if we want to move this a degree or two, we need to kind of know.
Yeah, and I think that we talked about this, was it last year? I can't remember, they all kind of mushed together, either last year or the year before, about the gross margin. right? We wanna make sure that we're protecting that to where we are
We've
going.
we've outperformed the budget that we kind of had as a worst case scenario this year, and then continue in the fourth quarter, we continue to see really strong gross profit margins, so it's gonna be something that we're continuing to improve.
Yeah, because if we continue to erode the margin, then there's not gonna be any sort of district or Boise Center to protect. So, I mean, we can give it away, but that doesn't really help anybody. So I think that that balance and what you guys are doing between, you know, the different sales, long-term sales, short-term sales, and trying to manage that space is working from my perspective. I don't know if you've got a different,
I think
thought.
that staff and the board are in alignment.
Yeah. Cause I mean, like you said, it's a give and a take with the revenue that you'd get off of, you know, those A conventions with room revenue, tax revenue versus more profitable banquet or reception with a lot of bar and food, AV, right?
We're getting, and I'm a very data-driven person, so I know Pat and me have different approaches to this, but I know the team is kind of getting excited about the idea of weighting conventions along with the local group. So we can kind of get a scoring system that basically says, this is good for the district, this is good for the center, these are good for both, and that we can kind of compare a convention that comes in at a very similar benefit as to a local event on the local side. So we know if we're displacing something on the calendar, we're doing it intentionally and strategically rather than potentially booking a very similar piece of business that would step on repeat, that would come back year after year, that would get chased out, so.
Cause the money all belongs to the same family. It just depends on which pipeline it comes through,
Exactly.
right? District side versus Boise Center side.
And it's been a unique environment where the district's been able to benefit even while we've continued to focus more on the local events because the leisure market has been so strong from the hotel side. So I think it's been a win-win for both based on how we've done it.
I have a few minutes because I
Sure,
know
yeah,
we're gonna run out of time.
Yep.
Jill, how long have you been here?
17, it'll be 18 years in November. Oh, are you?
Oh.
Oh, sorry, I think you're looking at me.
Oh, hi, almost 90 days.
Well, and you're in charge of operations.
Correct. I'll be more the day-to-day of the facility.
I just, sorry if I didn't give you more advance warning, but I'm curious, in the first 90 days, you probably observe things that you have questions about.
That's correct. Yeah.
Areas of the operation that are different than what you're accustomed to.
Yeah.
And is there certain areas that concern you more than others?
No, I mean, I think as an industry whole, you know, events have just been struggling last couple of years. I think COVID, everyone's kind of coming out of the same kind of element of staffing and bringing back at a high amount of events, right? Kind of playing catch up, but no, I've been very impressed. I think we have adequate amount of staff doing a really good job. So I don't see any red flags dramatically. A very different, coming from a state and college funding is different than here that doesn't have hotel revenue behind it. So
Is the operation primarily a food and beverage issue?
here,
Yes,
no, I don't see an issue.
I'm sorry.
I'm not sure if I understand your question.
Well, I mean, you have other departments.
Yeah,
You have
right.
maintenance and I've forgotten what your departments are. In fact, I'd like an updated organization chart.
Yeah, I think, I mean,
But I'm trying to get a handle on where you see your emphasis.
I understand. I mean, I think, mentioning the technology, the director of technology services, I think getting the IT and AV and really being part of the sales, right out the gate, kind of putting together more of a menu and educating people on like the AV side. I think there's opportunity to, you know, technology's coming through a lot of events, and that's, I think, something that I'm excited to highlight with Casey, who's on board. I think hopefully our food prices kind of stay the same, and we can continue to grow. But I think putting together a plan and looking at our events, how much staff do we have at certain times, and how can we be intentional about, you know, staff on site and not making sure you have too many or too less. So I think I'm just continuing to learn and see where we're at.
What's your additional impression on the competitiveness of our pay?
I think think we do a good job.
You think we're at the high end or?
Not gonna review, I mean, I think we're.
I think he's asking your opinion to come from Boise State, so
Yeah.
speak to that.
Yes, we are much higher than a state employee. Different, I think pay for benefits is maybe a little bit different. From a state employee, you have different benefits with retirement or things like that. But I think we have competitive pay, for sure.
I'll add to it with an anecdote that we've taken 3 employees from Boise State. I don't, not intentionally, and apologize to them, but at the end of the day, we've had 3 employees come over from Boise State in the last 6 months in particular. She is one of them, the director of technical services, the other, and then the operations manager. So I know we're competitive in the market on pay. We're still up against, we're not in the top 90 percentile. We're not, I mean, Gardner is a perfect example, is when they were hiring building engineers, they took one of our facility maintenance workers over to their side, actually 2 of them. They can pay in that 90 percentile. We're not doing that. So we do it with culture, additional benefits. We like to feed our staff as part of what we do here, and then make it a great place to work. That's how I think we're winning, but we're competitive in pay, and I feel very proud about what we've done, and the board is supported from a pay structure standpoint, so.
I mentioned that we've had 2 wage reviews.
Yes, we did, actually, this last year, we did 2 wage reviews. Normally, we do 1 every 2 years. Post-COVID, we've been doing them every year with Ameriben. What I wanted to do this year was, we've used Ameriben for so many years, was make sure that if we were to get a second opinion, kind of like a doctor, where is it gonna come back? Are we in the right, are we hunting in the right area? Are we getting the right information? Are our comparables looking like they're the right? Because a lot of times there's not another convention center, obviously, in the Boise market. So if we're comparing ourselves to other hospitality, we want to be apples to apples. And so I think we did a really good job where we evaluated, we used a third party for the exec team on their pay, and then did an entire structure through Ameriben. And we compared the executive pay to the Ameriben structure, and then we felt like we were in the ballpark, we were getting the right information.
Have we ever had a union issue?
No, there has been talk, brief bubbles here and there on the.
Do you have unions at Boise State, Joe?
I think 2, I mean, I've lived in what now over 8 years, and I think 2 pay, it's as the market has changed with Boise, I mean, what is relevant on competitive pay and not is kind of at a weird time right now, I think. It's just been hard to keep up with the housing market here, so I think Boise Center's done a great job.
And I assume the age and condition of the facility is what you expected.
Yeah.
Nice kitchens.
Yes, great clean. I think they've done a great job.
Thank you.
You're welcome.
I think if you ask her that question in another year, after she's got part of IABM and everything, you're gonna get a much more robust answer, but she's still learning and drinking from the fire hose, so.
Okay, I mean, the only other things, I mean, it looks like parking costs went up a fair amount.
We started, again, going back to retention, particularly for the part-time staff. When I meet with the part-time teams, whether it be operational or the F&B, particularly the service staff, one of the things that they said is, we don't have, we don't really get any benefits, so, kind of start listing, well, you eat pretty well, you get access to, soda machines back in the day. But when it came down to brass tacks, one of the things that we were facing is parking, particularly competing with other places downtown. So we initiated a program where we match 50-50 to the employees, the part-time employees. So, pardon me, so the parking vouchers, they can buy parking vouchers at half price, basically have it deducted out of their paycheck. So that's why you've seen an increase in parking costs generally particularly over the last year. Is it just, again, if we're gonna get the part-time employees, that's just something we probably have to do. The new cost of doing business, it's a little painful, but I think from what our employees tell us, I mean, Anna can speak to it because she's the one who all the employees go to get the parking passes.
Yeah.
For sure, they really like that benefit a lot. And the fact that it's deducted from their paycheck is great. It's super convenient for them because they don't have to worry about the flow of their like cash and having cash on them. So that's a really good benefit. And as the weather gets colder, they're gonna wanna, they're less likely to wanna park real far away. So they're real happy about being able to just go into one of the parking lots that are nearby.
that's one of the competitive benefits when it comes to wage, and they're looking at the same wage at somewhere at a BSU or somewhere else outside outside of the downtown core. They don't have to pay for parking. That's been the thing that's leveled the playing field for us. a little
And
bit.
do you or has anybody asked about vouchers for public transit bus
Yes,
services?
we do get referrals for that, and our HR department, Megan in particular, has a real nice little like one sheeter. It kind of tells everybody all their options, so like ride share, bus, anything that they can, even some like bike rentals information and stuff, so we provide that on orientation.
And we've worked with CCDC over the last, well, even pre-COVID, but then post. They've established a program, I think it's 3 in the afternoon to 6 in the morning. You can buy a monthly pass for that at a discount through CCDC. So, and they, and back when Max was here, he and I started working on that years ago. And then they expanded out to other service providers, so.
Okay, yeah, so the
We keep trying to get creative with it
park or
to try to.
ride bus or whatever.
Can we talk about tomorrow?
Yes,
I'm gonna chair the meeting.
yes,
You're gonna maybe call in.
yes. Yeah, it makes more sense for you to run it from here.
Okay. Do you have a agenda?
I can get you one before you leave.
And that's right. Yeah, is there anything that, I mean, it's pretty,
Pretty straightforward day.
okay,
Are you planning on just calling in or zooming in, or do you know which one?
Zoom.
Okay.
But I'll be in an airport, so I probably will have the camera on.
No,
Unless you wanna,
That's fine. You can call in on that 1-800 number on the Zoom link as well. I just want to make sure these guys knew which one to expect, so they know you would get you into the.
thank you.
we'll just have to play it by ear. I don't know how good the Wi-Fi will be, or if I may have to call. I don't know. We'll just,
Thanks, Jody.
Kristen, will you be back?
again,
Oh, okay. Well, the reason is we have those resolutions that need signed.
Yeah.
So we can renew the
no, it's
lease.
just, it's a quick day.
Yeah.
6 AM to 5
So
PM.
maybe you and I could catch up.
Yeah.
Late in the week.
Right. See no other business before the board, meeting adjourned.